ladies and gentlemen. And today's topic, of course, is road towards profitability. Now, let me see what big data, in what small way can it help us to reach the road to profitability. The theme and the year, it goes like this. The last 3 years, including this, the theme has been the same. Motor insurance, the road towards profitability. Which means that we are still not reached there. I wouldn't be surprised if the next year's topic is the same. I wouldn't be surprised at all. Going forward, let's see what the next set of slides hold for us. Here we have, and one of our fellow speakers was talking and said that information is powerful. Yes, information is powerful. Back in the olden days, when insurance was at a good stage, we had enough lies, frauds, and many things fomenting there. And these frauds multiplied, and they become damn lies. And then insurance companies started gearing up and said, let's have a little bit of statistics. That's when statistics came in. However, today, insurance companies have been sitting on piles and piles of data, and that's big data for you. Now, sitting on piles and piles of data, is it helpful to us or not helpful to us? And if it is not helpful to us, in what way do we make this helpful to us? And this data, huge data, volumes, and the velocity with which this has to be processed, and of course the variety that comes with this data, all of which have to be analyzed properly. And to go with that, do we have the technology today in the current insurers landscape to analyze this data in a meaningful way? I'm afraid not all insurers are in this league. Now, when you look at data, the data source can be from various places. One of them could be from the geospatial system. Another one could be the social media. Another one is the internet click streams. And of course, your own historical data. Now, while we have this information coming from various sources, what kinds of data that we would get here? The audio data, the video data, and of course, the sensor data. Now, there's a little more interesting thing here. A subset of big data, this is where I'm going to veer off. And when I veer off, it means telematics is the essence of the day. But telematics is nothing but data that is collected by the devices that helps the insurance companies to regulate their price or perhaps minimize their losses as they occur. Let's have a brief look at what telematics is all about. It's a combination of telecommunication and, of course, informatics, and that's exactly the abridged version is known as telematics here. Why do we require this telematics? We require this for proper understanding and how fast was this driver or how fast was this person driving at the point of time of his driving experience. This information from telematics will help us in kind of drawing up a good pricing model. Not only this, how does this do? This is completely technical. I would not like to go into the depth of technicality for the reason of time and probably for the reason of the depth that is warranted here. However, there are a lot of sensor devices, and today the internet and perhaps the wireless communication is tremendously improved, and we don't lack that. And that's one of the means of getting that data to the right place at the right time. Now, telematics, again, how does it work? There's a transmission of the vehicle data with the sensor devices. And this information is collected and stored on strong and robust databases for proper analysis. And ultimately, what is the essence here is proper analysis is what determines the proper pricing. Back here, if you look at it, today all of us, we have been using very smart gadgets, smartphones, and of course, voluntarily or involuntarily, you also been wearing some nice wristbands which actually communicate your blood pressure or perhaps the pulse rate and so many other things. This is indirectly telematics. We have embraced it. We have embraced it in a small way, the first stepping stone. However, it's not far when we can visualize that this information can also be used to determine whether a driver should drive his car today because his blood pressure could be high. So this is telematics. Now in the meanwhile, telematics is not restricted to the information that you see on the screen. This is not exhaustive, but this is enough to think about telematics. The mileage, the time of the day when a driver uses the car to drive, the braking habits, the speed at which he or she drives, the acceleration habits, and of course the sharp turns, the route taken, the location, and of course the disengagement, and also any of the diagnostic views. Now, on the right-hand side of this, you have the pricing, the product development, of course the safety advice, and the vehicle advice. All those green spots, what you see there, they are perhaps required to do your pricing. They are perhaps required to do your product development. And of course, for some safety advice and vehicle advice. We have been doing a project in one of the places in Europe, and this particular insurer is not offering just insurance. In fact, this insurer is going for an insurance plus plus, which means that this particular company would like to maintain the vehicle history, which means including the days when the tires were changed, when was it changed, what was the mileage driven when it was changed, many information would be stored. It's going to become one-stop shop, especially if this is the kind of insurance plus plus services are being offered. The blue spots on this screen indicates that these are some value adds that the insurer can provide. And the insurance company can provide this because of this information being available. Now, all of this telematics is driving towards a usage-based insurance. And because of this usage-based insurance, what are the benefits that the insurers derive? Probably accurate pricing. In fact, many of my fellow speakers today mentioned about the pricing factor. It's a wrong pricing. There's an inflated reserve. So many factors were coming out. Telematics is one way of going ahead in trying to control this. I won't say this is the magic, but this is one step towards that. Reduction in cost, or the loss cost, which means in view of the improved driving, there is always a possibility of a reduction of the loss, or rather there may not be a loss occurring at all. Increased retention of the customers, one of the possibilities, because you're not penalizing every driver in the town. It's only the rash drivers, it's only the erratic drivers who will be penalized. And of course, a new theme in the town, probably new customers on the annual. You also have benefits for the insured. Good premium discounts, individual portals, which means the insured can go to this portal, analyze his behavioral traits, understand his driving habits. There could be some vehicle performance advices as well. I said there could be something, a plus offering that you can make. And the safety advice, if there was one to be given, that can also be a plus and a value add. Now, early adapters. This is a classic case study. If anyone has to quote something about the success story of telematics, it's Progressive here in US. Of course, they have been the leaders and pioneers. There are other followers, Allstate, Admiral, and so on. But if you look at these people, probably one of the oldest insurance companies established in 1937 and a little more than 75 years now. And these people were the ones to be on the track for telematics. 2008, 2004, if you look at it, they were already on the telematics zone. Now, what best happens here is, if you go back to their website, there are a lot of information available about Progressive, and one of them is the snapshot usage-based insurance for vehicle. This is very popular, and this is very successful. And how does it work? What does Progressive do? This is not necessarily the best model that you should incorporate, but this is a good model. What does it do? The device is fitted into a car and is on observation for about 30 days initially. You know the patterns, you know the strains about this particular driving habit or a driver's driving habit. You price the premium at the end of 30th day. Now, starting from the 30th day until the expiry of the policy and perhaps for the renewal, that's when you can again re-evaluate the driving habits. So this is how Progressive has started, and they have marched ahead. Market trends, yes, in America about 17% of the insurers are already having these programs. There are 53% who are actually on the pilot are probably initiating to think about telematics. Now back in Europe, we have 20 plus insurers with this kind of program, and with UK being a leader, and where their focus is on the price and also young drivers. There are numerous startups which is also encouraging in the UK market, and of course fomented by advertisements. Italy has a very strong take-up with about 2 million plus users or customers following the UBI method. And they're also propagating the vehicle theft proposition. Nordics, right now, they are leveraging upon the smartphones. Big insurance companies are still serious, and they are looking at what we can do in telematics. On the LATAM and Asia Pac and Japan, Brazil's success is based on vehicle theft proposition, which is what we are seeing in Italy on this side. Japan, IOE is a pioneer. IOE is another large insurer, and they are the pioneer there. Australia is about 2 companies which is now seriously looking at telematics. And we have China and India, the sleeping giants, probably waking up soon. Now, entity data per se, what does it offer? We have been talking about big data, we have been talking about telematics, and of course we are also into many other leagues. And here is what we offer. The stream processing and storing environment, this is the space, as you pronounce it, with an S here. It's a framework which provides you, which means you get an early start, you have a head start against your competitors or perhaps anybody in the market. All you need to do is surround it with what you really want. You might probably have some information, some kind of facilities already, and you need a framework to launch that upon, and here we have it. And entity data insurance telematics solution, yes, we are also into that. There's a lot of R&D that has gone into it. So whenever we think of insurance, we are also keeping pace with what the insurance market requires, whether it's big data or whether it's telematics. And here is what we have done over a period of time. Proposition, this will be based on usage-based insurance. The insurance telematics claims, which means it could also supplement and help you in the event of claims, especially knowing the facts at the time of accident. Then we have the policyholder experience, which means retention of the policyholders depending on the experiences. And here is what telematics could do. And finally, the motor insurance analytics, which means you have big data to do analysis, which means your new pricing model could be more efficient and much more comprehensive. And this is the solution architecture. Whatever we have been proposing is out here, the way it can be coupled within your technological architecture. And somewhere in the middle, you could also look at entity data integration platform, which means we are also coming with a very powerful integration component, integration layer, And this is possible because we have advanced in technology. We have gone to a situation where we have entire application suite sitting on the Java technology, on the SOA architecture. And this foments very well for us to decouple and loosely couple other components. And this is no exception here. The only flavor that's, there's a small mistake there, but that box should be into the bottom one. Big data can also be communicating through this telematics or the integration component. Well, so much about big data and this. Now, what are the challenges in the market? The challenges are not few, there are many. First and foremost thing, are the insurers ready for a change? Will there be a leader or there be many laggards? And whoever takes the plunge, will they be the game changer? So there is a bit of what you call initial skepticism. Should I start or should I not? The next thing is the consumer aptitude, the consumer behavior. Will the consumer accept this kind of a change? Pay as you use, pay how you use. And of course, the regulatory approvals. And is the regulatory ready for this kind of a change that the insurers would like to adapt? Added to all of this, there is the infrastructure, the network and communication, and of course the IT systems, which should also permit you because there will be a lot of investment that you may have to make initially. Now this is to sum up the challenges here. Now beyond that, the cost of change, which means any of them or all of them that you embrace here means there is a cost and cost for change. And is this cost good enough to ensure road to profitability? This has to be evaluated. Of course, change is constant and change we have to. Last but not least on this slide, we have spoken about big data, telematics, and of course here we have state-of-the-art solutions, which means we have a comprehensive system for the non-life, the life, and the reinsurers in the market. It's a complete comprehensive package. So which means entity data supports you from start to end. You have the complete policy administration system. After that, you have the extended ones, which is the big data, and of course, the telematics. And here we are in the market. All of these are our customers. All of these are customers. And from these customers, we generate a revenue of close to $800 million per annum. And the target is to be $1 billion revenue from the customers.